Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading. Today, market is up about 1.2% there. On the S&P Nasdaq up 2%. Semiconductor did the same. Dow 1, Russell 2000 and Transport made a move here. 2% positive on those guys. However, it looks like Banks pretty much flat today on this bright green day. Energy up 1.5. Biotech made a move 2.5% positive. Healthcare half a percentage. Home builders about 2%. Utilities is red today, 0.2% negative. Retail made a move 2.2% positive along with the emerging market. Bitcoin up quite a bit. Gold silver miners are up today, notably miners up about 2.3%. Dollar down, oil up, treasury bond flat. VIX is down about 10%. Let's do with S&P 500 ETF. Spider, 65-minute chart here. So this is where we closed yesterday. And this is where we opened up today. So it looks like we opened up flat. And we extensively talked about the fact that we need to see a follow through after that hammer candle there, right? And also not to mention we had that 438 pivot coinciding with my midterm moving average in that vicinity. And with that hammer candle, that could mean absolutely nothing without the follow through at least 2 hours. This morning, well, that's the first hour and that's the second hour. So we did definitely see that follow through on the first 2 hours today. And not to mention, we pretty much, marched higher all day long. But what was important, looking at things in the micro term, check out that micro term moving average acting as resistance just the other day. And that micro term moving average potentially supporting the buyers as of today. Keep in mind that micro term moving average is flipping back and forth almost every single day. So it's not really trustworthy, but at least bulls can have a little bit of hope that we may see continuation tomorrow. However, my short-term moving average is coming down right now, right here. You can see that short-term moving average acting as resistance just about several days ago. And it is kind of hovering right now just underneath that gap area, 445.87. And that's the level that coinciding with my down gap. As I've annotated with my box there, the down gap area. So that's kind of the double resistance that bulls have to battle, right, in that vicinity. Keep in mind, though, last time when bulls did make pretty solid gap up, and when they did not able to fill the entirety of that down gap, what happened? Market tanked. Deteriorated it the entire day. So it looks like the buyers are getting up here with a little bit of that hammer candle follow through, and they might be trying one more time to see if they can fill this down gap. And here's what I'm going to tell you right now. If that down gap doesn't get filled, buyers will push. We will go lower than 438. If you don't want to see any lower prices, at least make a way for higher prices going forward. The buyers must go above the short-term moving average and find a way to get up and fill that down gap as quickly as possible. If not, if we get rejected on that short-term moving average right here, and not even have to fill that down gap, because you guys remember what happened last time, right? Because there was another down gap right here. That gap wasn't fully filled, 10% remaining. My short-term moving average in that vicinity, 2 days of downturn came about. If you don't want to see another 2-3 down days in the next trading sessions, not only you have to go above and break above the short-term moving average, where you would have to go up and fill that down gap completely. Completely. Don't leave anything behind. Completely. Let's check out that oscillator and see if we can extract any more information. So here is, what bulls are silently, quietly cultivating, strategizing, and building something here. I mean, this is so big that actually, if this actually plays out, not only Bulls gonna able to get up and fill the gap at 460, and we may witness one more time the battle with the boss bears. But I think this setup right now, what we're seeing is that Bulls are going after not only to defeat the boss bears, but Bulls are going after the new all-time highs, right? Because this is what I call coiling setup. You can see how the oscillator has been coiling, right? The oscillators are meant to oscillate back and forth at the top and the bottom of its band. But when the oscillator kind of not do that, right? Oscillator kind of gets up, come back down. It doesn't go all the way to the top of his band, but it doesn't come all the way back down to the bottom of his band either. What it does is stop short. What it's saying is it's building some kind of energy right here. If Bulls can manage to see a breakout out of this, all this energy that's been cultivated and stored since mid-March, all that energy is gonna support whichever it breaks. So if it breaks out to the upside, there's gonna be a significant amount of pressure to the upside. But the opposite is true though, right? Bears can actually use this against the Bulls, let this plan backfire on them and breaking it lower. Keep in mind that this resistance, you can see it, and this resistance going all the way back to what? Mid-March. We're entire month. This resistance right here, it's been sustained. And the Bulls been bound by this oscillator resistance for entire month. And keep in mind, that's coming up right now. So you can see, Bulls have to deal with that down gap and the short-term moving average that acted as a resistance. Not to mention that oscillator resistance, it's been acting as that, acting as strong resistance in the last 1 month. And that's right here. So Bulls have one objective and one objective only. Break out of this and fill this gap. Bears got one objective and one objective only. Don't let the Bulls do any of that, because if you do, mark my words, Bulls will find a way to new all-time highs. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening. Good luck training tomorrow.